Iron ore prices are under pressure due to a strong global supply and weakening demand from China, particularly in the construction sector. Analysts at Goldman Sachs expect prices to drop to around $85 a tonne by the end of the year due to oversupply stockpile increases at the Chinese ports. The Japanese Nikkei 225 has been buoyed by strong corporate earnings and a weak yen, which supports Japan's export sector. However, global economic concerns, particularly in China and the rise using US Treasury yields, present risks of volatility in the market. Gold prices remain stable but show signs of modest pressure due to anticipated central bank moves and higher US interest rates. Analysts project a rally could push prices towards 3,000 as investors look for safe haven assets amid inflationary fears and global uncertainties. Silver is also experiencing modest pressure, but its close relationship with industrial demand means it may be more volatile than gold. Short-term dips are expected as traders await clearer signals from broader market fundamentals. G'day folks, welcome back to another update on Fresh Market Updates. So we've got here a fresh breakouts to the upside and downside. Before we go any further, make sure you hit that like and subscribe button to support the channel more. Now, looking at here at, I've got two markets that are breaking to the downside. That's iron ore and the Japanese Nikkei, and gold and silver have a fresh breakout to the upside. So here, first of all, we've got iron ore. And you can see here on the daily chart, it's actually got a fresh breakout to the downside below the CCI 150 moving average, although the price is still above its respective moving averages. Now, if I zoom out on the daily chart, I did also draw this previous diagonal supporting trend line, and you can see there it's actually gravitated back to that and stopped there at the moment where it is. And that's been a long-term trend line drawn back along these bottoms. As well, we've got this key support here at 656.50, and it's actually bounced off that. We did have a bullish divergence here, higher lows on the CCI versus lower lows on the price, and it bounced quite nicely. And that retraced, if I was to draw a Fibonacci from that low, and we take it back to the previous high. Now, that's probably a bit too, you can see there to that point it's actually gone well beyond 100%, but let's take it back to that significant high there, at that resistance at 923. You can see there it's reached the 61% retrace off that minor resistance at 839, and it's bounced back down to this diagonal ascending trend line. But you'll notice on the daily it's broken to the downside on the CCI, which is our key indicator for trend analysis, and that's actually a bearish outlook. Now, if we go to the 1 hour chart, if you're trading on the intraday, you only take short trades from here on. So if I turn on the short arrows, you would have only taken a short trade going from that point there. This is on the 1 hour chart. Of course, you can apply this to any other intraday chart, or if you're trading on the daily, you could probably enter a short position there possibly. But at the moment, it's trending to the downside and taking short trades on that basis on the 1 hour chart. We did anticipate, I think a day ago or maybe 2 days ago, we did anticipate the Japanese Nikkei to break to the downside, which it has done today. So again, confirming that. It's broken below that on the CCI 150 on the daily. And you can see on the price chart, it's actually hitting this moving average range of the price moving averages. So we expect this to fall further. On the 1 hour chart, that's also bearish, again taking short trades only, and I've got these arrows turned on, taking those short trades and closing it out a couple of ways. Either wait for the price to hit into this moving average on the price chart, or wait for the CCI to hit that moving average range of the CCI, whatever suits you in terms of exit strategy. Next, we'll look at gold. Now, this is one of the fresh breakouts to the upside. Now, we did review this recently, and we did actually draw this. If I zoom out on the daily, you can see there it's broken above the CCI 150 on the dailies, CCI moving averages, giving us a bullish momentum. Notice we did have this very long-term bearish divergence, and we drew this Fibonacci range, and that was our initial target area. Now, that's been invalidated because the price has broken above this previous resistance. Now, making new upside, I'm going to remove this. I'm going to remove that Fibonacci and raise it to that new high. Now, at the moment, it looks like it's going to continue raising, so I'm not going to worry about drawing a new target area. Let me just remove that for the moment, and we're going to see where that stops. Now, once we see the CCI break to the downside, and we see the price start retracing back down to the downside, that's when we'll start drawing the targets. But at the moment, upward momentum, and this could have new movement to the upside in the short term at least. Looking at the 1 hour chart for gold, you can see here, again, it's broken up past that previous resistance at 2685. The 1 hour CCI is also breaking more to the upside, that would have been our last entry where that blue arrow is, and you'd still be in a trade if you're trading it based on the price hitting this moving average band. So that's the entry strategy. And again, the exit strategy would be when the price hits that band, or when the CCI 150 hits that moving average band, whatever suits your exit approach. And lastly, we'll look at silver, which has also got a fresh breakout to the upside. So if I zoom in on the daily chart first, again, we've still got this resistance up here at 32.51. The CCI is broken above its moving averages, so we expect at the very least to hit this resistance and possibly break higher, but at the moment we'll take it one step at a time. So bullish momentum at the moment. Now on the 1 hour chart, I've got the bullish arrows turned on. Again, see there when it breaks above on the CCI, you would have entered that where that blue arrow is, and you'd still be in a trade today. Again, wait for it to break to the downside before exiting, either breaking below the EMA 9, the moving average band, or breaking into that moving average band of the CCI. Again, whichever strategy works best for you. To support us more, make sure you hit that like and subscribe button and share the videos. But for some more insights into some blue chip share scans, I do a weekly report, and in that report we also look at insider information for shares that are trending in a bullish manner. So go to the Patreon page, and links in the description below.